Prices are going to keep going up for the rest of the year. Hey everyone, welcome back. Vancouver Life Real Estate Podcast and YouTube channel. Dan and Ryan here. Today we are going to outline what to expect with home prices for the remainder of 2021. And similar to the last 18 months, the trajectory is up. There is just so much data that points to prices continuing to be squeezed upwards. Let's take a bit of a national look first here and talk about home sales. This is the volume of homes that have sold. So home sales are down about 28% from the March peak. But if you kind of pull back and look at maybe the last 10 years or so, outside of Q1 2021, which was understandably the most absurd sales period in recorded history, sales are still at an all-time high. So just take out the insanity of Q1. If you look at a 10-year metric, sales are at all-time highs. So while it's important data, relaying on just that March peak, as we see sometimes out there, as your anchor for a reference, it's a bit misleading and obviously not the whole picture, right? That'd be just like us saying, well, the March 2020 dip when everything was locked down, that's where sales were a third lower than they are today. Like, are we 300 times up where we were? No. So just make sure you're getting the full picture when you're kind of doing your research about where sales and prices really are in Canada and of course here in Metro Vancouver. Now, interestingly though, that decline was largely concentrated out east, of course in Ontario predominantly, because in British Columbia and Alberta, we actually saw a sales increase last month of 2.6%. That's volumes again, right? But again, the big picture is what Ryan's going to talk about next.
Yeah, and we've been kind of talking about it for some time, right? The extreme lack of inventory, not just here, but across the nation, it's actually staggering. The total active listings was down 4.2% last month, driving inventory to a fresh 20-year low. Remember, actually, last month, we talked about how, I think it was back in 2015, Dan, or 2016?
2016, 5 years ago.
Where we saw nationally across Canada, 250,000 active listings, right? And then you fast forward to where we were about a month ago, and that was down to 110,000. We're now down to 104,000. To kind of bring you back into the province, in BC, the inventory levels are down 37.3% year over year. That is a staggering number. It's no wonder prices are up by 20 as well, right? When you look at that. But that's second only to Ontario, which is actually number one in the country at 39.2%. So what does that actually mean, right? Because it's important to understand what that data means. That puts us at about 2.2 months of inventory that's available on the market. So Dan, what does that mean in terms of prices going up or prices going down? Because there's a bit of a metric to follow there.
Exactly. So months of inventory is an important one. It's very similar to the sales to active listings ratio. The market needs to have about 5 months of sustained inventory available for prices to start to decline. That means the amount of homes available divided by the amount of sales per month. So we need about 5 months. Today, as Ryan mentioned, we're sitting at 2.2 months of inventory. So, unless we get 130% more listings tomorrow, or a 60% drop in sales volumes, we are not going to see prices even come close to a balanced market. And, these are obviously massive numbers that just, you're not going to hit them in any kind of quick time frame.
It's funny too, because, well, obviously we monitor the market every week and we talk about it every week. But I would say that this week in particular, which it's interesting because I don't know what happened, but we've had some listings that have been a little stagnant, especially in the condo market kind of thing. And it's exploding all of a sudden. These listings that have been on the market now for 30, 40 days that weren't really, either they were priced pegged a little higher or for whatever reason didn't meet the typical buying criteria for people. They're now getting tons of showings and tons of interest, right? To the point where I'm starting to feel like this trickle down effect is starting to happen now, where we had, when you look at historical markets, people go after what they can afford the most of. They buy the most property with the least amount of dollars. Single family has now gotten so expensive. People are now trickling down into townhomes, duplexes, and now I think we're starting to see it into condos. And it's all over the place. I wish that there was a bit more detail to break that down, but it's across all property types.
Well, I think too, Ryan, further to your point, I think a lot of people have been waiting for something quote unquote better to hit the market. And, 3, 4, 5, 6 months goes along and they're not seeing what their vision of better is. So they're having to reevaluate the plans and reevaluate, what is actually in the market and is it more viable? Because we definitely see some people saying, look, yes, I want that dream, but if I've been waiting 6 months for that dream home and just nothing even close is coming, but I want to be in this market that's on this like runaway freight train kind of feeling, then I think they're kind of doubling back and looking at properties that didn't make the first cut, but maybe they make round 2 or 3.
Well, and that's interesting too, because people often try, I literally just got off a Zoom call with somebody who's coming to the province from another province. And they're like, well, look, maybe we'll rent first. We'll kind of wait for the market to settle down a little bit. And I'm going, ugh. If we had more inventory, or there was more inventory that we knew about that was coming online, I would tend to agree. But the fact that we don't, the fact that we also know that money is going to stay cheap until Q2, at least Q2 of 2022, I think you're going to see more of the same story. I mean, like we said, in March, we had the foot to the floor on the highway. We were doing 200 kilometers an hour, right? Then through the summer, it backed off. We came all the way down to probably 150 kilometers an hour. It's starting to feel like people are putting their foot back on the gas again.
Absolutely. I think too, like let's extrapolate even further and demonstrate how extreme this housing shortage really is. There are today 300,000 dwellings under construction across Canada. This is by far the most it has ever been. So sounds great, right? New homes to the rescue. Well, think of it like this. You have to remove the 97,000-ish that are purpose-built rentals. Okay, those are never coming to the market for end users. So that leaves around 200,000 homes, condos and single families combined in the construction pipeline. Let's create a scenario where all 200,000 of these complete next month, right? Obviously a hypothetical because some of these are condo towers that are probably 5 years out. But pretend 200,000 new homes hit the market next month. With couple that with like an educated guess of maybe 50% of those are going to be bought by people that have to sell first, right? Half are going to come from rental units, half are going to come from a different home. So that puts about 200,000 completions and 100,000 resale homes.
Can you imagine?
Yeah, right. And we are talking nationally. That would double the inventory that we're at today. Double.
Right.
So if all 100K hit the market next month, inventory would still be down 20% from where it was 5 years ago.
Yeah.
Okay. Months of inventory would rise to 4.
Still not even enough.
We're not even in a balanced market. We're still in the seller's market if 100,000 homes hit the market tomorrow.
Wow.
Yeah. Now let's go even further. Let's say all 200,000 hit the market and nobody's coming or nobody is moving laterally. So it's all fresh inventory here. Months of inventory total would hit 6.3, which sounds okay, great. That's way better, right? We only need 5 for prices to potentially decline. Mm-hmm. Well, 6.3 months of inventory was the national average between 2010 and 2015. Do we remember what happened then?
The market went up.
It didn't exactly collapse then, right? In fact, GVRD rose 14% during that time frame.
And then it accelerated like crazy right after.
That's it. So, I mean, the point we're really trying to drive home here is that we are so far away from an even balanced market that even the record amount of homes under construction are not even going to move the needle in any significant manner. Prices based on that alone are going to continue upwards. It's simple math. There's not much else to really extrapolate there.
Yeah. And let's talk a little bit about boots on the ground kind of stuff, because, we can speak to that, right? We sold 10 homes in September, and 7 of them, 70% were fought in multiple offers. And I mean, fought. Like, we just did one a couple days ago. It was a 9-way multiple offer. right? The home sold for hundreds of thousands of dollars over the list price. I feel like list prices have kind of just gone out the window a couple months ago. Like I mean, we're looking at, duplexes in East Vancouver as well. They're listed in and around the 1.7 sort of range, and they're selling in the 1.9s to even higher. It's bonkers, right?
Yeah.
And then
And
you got
those,
GST on top of that too,
yeah.
right?
Yeah, those 10 homes too. I mean, we were on both sides, right? Some of those were sales, some were purchases. And we're talking everything from downtown condos to detached in Port Moody and almost everything in between. So a real range of property types and neighborhoods. And like I said, our experience last month, 70% of the homes we bought or sold were in multiple offers. I mean,
Yeah.
we sold a 2-bedroom condo in Renfrew area that got 8 offers.
Yeah.
A condo. I mean, it's happening all over the place. So you understand when there's no inventory, people are fighting for the little bit that is left. And the good ones, and especially the detached homes, it's
Gone.
vicious out there.
Yeah. And I mean, when you look at, non-permanent residents, so mostly students, we're up 200% since July 2020. That's the highest number in recorded history, right? Those are renters.
Mm-hmm.
They're going to push rental values. They're going to push the rental market.
40,000 students primarily came into the province, or sorry, into the country just last month alone. The highest on record.
Holy cow.
Of course that's going to have an impact. Ryan, what do you figure?
I mean, rental rates are already up 10% over the last 2 months alone.
Yeah.
So, I mean, I think you're just going to see more of the same. You're going to see more of it. I don't know. None of these metrics are going the other way. None of them.
Mm-hmm. That's right. That's right. And there's more.
Yeah. Well, yeah, there's a lot more.
Sorry, are you going to say something, or should we get into mortgages?
Just mostly that mortgages. Yeah. No, you take on that mortgage piece, because this is crazy.
Okay, sure. New mortgage growth rate hit a 13-year high last month, the highest since 2008. But the net increase in mortgages in Q2 of 2021 was the highest on record by a factor of 2. It was twice as high as it has ever been ever.
So what is it before? So what was it before?
The previous record was in and around, I believe, $32 billion for the quarter.
And so you're saying 60 plus billion?
$60 billion in new mortgages in Q2 2021.
What about the 3 billion that the Liberals are going to commit to building 1.4 million homes?
This is going to be a joke for the next 4 years.
Well, yeah. I mean, look at the data. Like the data. This is why when we heard this stuff, we had to talk about it, because it was just so ridiculous. But anyways, so Dan, 60 billion sounds like a lot of debt,
right? People must be getting into trouble. I mean, it sounds like it, right? And of course, the headlines are all about, oh, Canadians are the most indebted they've ever been. Well, let's expand on that. Inflation, as you have likely heard, hit 4.1% just last month. The average discounted mortgage, on the other hand, sits at 1.6%. This means that you are borrowing money at the rate of negative 2.5%. Banks are losing money by lending right now. They're paying you to take out a mortgage. Of course, people are going to take advantage of that. They're not silly, right? If you're like, hey, there's free money, in essence, do you want some? I mean, this is why Q2 was the highest ever on recorded history by double. Okay, it makes sense. Now, again, is this being done responsibly? Well, you have to think things like stress tests are in place. Canadians are wealthier than they've ever been. We've touched on that on many podcasts in the last 6 to 12 months. So we're in an environment where assets are being inflated. So yes, while household debt hit an all-time high, which is generally where the headlines stop for most media companies, think about this. For every $1 of debt, Canadians also have $6.50 in assets.
Whoa.
Okay, that's the highest in 20 years.
Why isn't anyone talking about that?
You can't have one number without relaying the other. You can't, because it's only half the picture.
My goodness. Yeah, I mean, at the end of the day, if you're investing or buying a home around national headlines and things like that, it's not a recipe for success. In fact, as we know, CMHC last year prices are going to go down by 18%. Well, I'm going to hold on to that. They went up by 20. That's a spread of 38% that you missed on, right? So be very careful when you're listening to those headlines. There's a story that's trying to be sent to you as opposed to looking at the whole picture, right?
Very true. And it's very important to notice too, the rate of debt is far underpacing the rate of asset wealth. Okay. Like the change, think of it like this. The change in net wealth for the average Canadian grew by a staggering 19% in the last 12 months. The average Canadian's wealth, I have to say that twice. The average Canadian's wealth grew by 19% in the last 12 months. And for reference, if you look at the last 30 years, the average sits around 6% per year. So we are more than 3 times the rate of wealth growth in the last year for the average Canadian. Canadians are feeling rich. They're feeling rich, and they're being told that they can get money for free, and they are buying homes with that money because they're told asset prices will increase. It is just this cycle that we're seeing happen. And this is why if you're trying to buy up all the assets, there are very few left.
So on top of this, I mean, credit card delinquencies hit all-time lows as well. So insolvencies are around half of what they were even just 2 years ago. So feeding this, story that Canadians are the most indebted, it's not the whole story, right? They're not telling you the other half of the story, right?
Their debt is making the money. That's the reality here.
Yeah, the debt, they're paying you to take on the debt. It's free, right? There's good debt and bad debt, right? Debt attached to an inflationary asset, that's good debt, right? Mm-hmm. And when they're like, hey, here's some free good debt, smart money will go and take that debt and go and make money on it. That's exactly what we're seeing.
That's right. There's a company in Ontario, the Hoyes Mikolos is the name of the company. I hope I'm pronouncing that correctly. They have a homeowner bankruptcy index, which measures the share of insolvencies filed by homeowners at their Ontario practice. Between, let's say, 2007, 2015, that number was between 20 and 35%. Okay. Wow. That's a big number. Now, that's not nationally, that's just for the people that were filing bankruptcy with them, right? Their homeowner insolvencies were about that high, 20 to 35%. Last month, that hit an all-time low for this company of 1.7%. People are paying their bills, they're paying off their credit cards, and these are the things that lead towards delinquencies, right? Obviously, the credit cards are the first thing you're not going to pay off. So the fact that that's at a record low, think about how far away not paying a mortgage is down that road. Miles. So everyone can afford their mortgage right now. And
this is only when you also take into account there's 76% of Canadians own their home and about 40% of them have mortgages. So there's a large portion of homeowners out here where this would never even apply to. This is only applying to those who have a mortgage.
That's right.
Right. So again, it's just a piece of the story.
Well, and think about the equity too. Like you said, when you have such a large majority of people that are homeowners outright, you calculate that into the people with mortgages, and the average Canadian has 72% equity in their home today. And that's including HELOCs. Okay. Wow. HELOCs are built into that 72%. It's 76% without HELOCs.
Wow. That means Canadians have their own banks. Their homes are their own banks. It's their own source of leverage, right? So they find, and then, it's kind of no wonder that these rates are so low when homeowners, I would say almost half of all homeowners don't have a mortgage. They can go and get one. They've got 76+% equity in their home. It's not stopping them from going and buying an investment condo when you're looking at the fact that 200,000 more students just came here.
That's it. Do you know how much home prices could technically drop before anyone even kind of remotely panics as a homeowner? Do you know what I mean? Like a 50% home drop. Well, I still have 22% equity. I don't have to sell. Yeah. You know what I mean? There's no panic at a 50% price reduction today, right? People aren't going to panic sell when they have a great home that they love and that they're in, and that they're still well above water in.
I would venture to say a lot of specifically Vancouver is like that. If If people don't get, the market value of their home or what they think their home is worth, they just don't sell it. They'll just sit on it, right? Because in a few years, that number will materialize. It's done that historically. And when you look at you look at the conditions economically of what they're faced with, and it's no wonder there's seller euphoria in the market. They have every reason to be euphoric.
So with all this data in mind, I think you can understand why our outlook on the rest of the year is that home prices are going to continue their upward price bound rate. Yeah, the trajectory for sure. It's just, what other data can you look at that says to the contrary?
Yeah, if there is and we're missing it, please come on the show. Let's talk about it, because we're looking for ways right now. We're looking for them, right?
Yeah, it all seems a little bit too good to be true in a sense, but again, numbers don't lie. So next week we have the September GVRD numbers coming out for the stats. Quick little insight, they're going up. Median prices alone are up 4% this month on average. That's GVRD, all property prices, or all property types, across the board. We'll obviously do a great deep dive for you next week. Please come and check it out. Get reminded, hit that subscribe, hit the bell. They do come out every Saturday morning. Thanks as always for watching and listening, and we look forward to bringing you more great Vancouver intel next week.